Thanks for joining me on this wonderful Friday. Nice to have you guys. A lot of things going on over the last few days, and we got some data that's coming out very soon that is supposed to spark a big move in the markets. Well, we don't know how big it's going to be, but it's supposed to spark something. So we're going to be looking at the markets. I'm going to be looking at gold. I want to look at some of the currencies and take a look at where price is right now with respect to the supply and demand coming in from the big institutions. And we'll take a look at some of the sentiment from retail to see if there's any aggressive biases there that are dictating what price is likely going to do. So thanks for joining me today for another session. And let's get to it, shall we? We have, first of all, we have this chart of gold here, a daily chart of gold. And I had previously pointed out right here a prediction that JP Morgan came out with. They predicted gold to go to 2.5 thousand by the end of 2024. And this was very interesting to me because when we were examining the CFTC data, we could see that long positions on gold were reaching their max size, okay, right here. All right. And so it was interesting because the banks were reaching max size on their long positions. And at that same time, JP Morgan was coming out predicting that gold was going to be higher by the end of 2024. Now we're midway through 2024, so could it eventually get up there? You know, maybe. It's not likely based on the fact that the banks need to offload a major portion of their long position. So if they're offloading longs, that means they're not adding longs. If they're not adding longs, then that means the likelihood of price going higher is very, very low. So we see them reaching maximum size, and boom, JP Morgan comes out and says, we're forecasting price is going to go up higher. So, you know that your typical trader is reading these forecasts and thinking, okay, so that means price is going to go from here to here. Okay. And so it started to make its way up there, but as price was heading up higher, what the banks were doing were likely preparing themselves for offloading positions, okay? So this drop that we saw, we were forecasting this. We did members for the public. We did more detailed videos for members, and some basic videos for the public. But our bias was to the downside. And we got a couple obstacles here. The first obstacle was this area of demand. This is the latest area of demand where the banks were buying. And that is what pushed price up to that 2400 area, 2480s. So that area has now been removed, which leaves us with another obstacle right here, the ascending trend line. So right now, you can see price is pausing. It could make a move down to that trend line. We're going to be watching to see what happens when price hits that trend line, because we could see a little bit of a move to the upside. And if that's the case, that would be retail traders buying, okay? Because, again, their conventional textbooks tell them when price reaches an ascending trend line to be buying, because they expect price to head higher off areas like that. But what we know and what we don't use is we don't use conventional technical analysis. What we're looking for is real evidence to suggest whether or not price is going to move up. Now, again, price is hitting an ascending trend line. Just because it's hitting an ascending trend line doesn't mean it's going to go up, especially when banks have already maxed out on their long positions. So any type of move to the upside off of an ascending trend line is going to be fueled likely by retail traders, okay? So keep that in mind, because in the weeks to come, if we see any type of a move to the upside, I don't want you guys to get excited thinking, oh, we're going to start moving to the upside. No. Now, keep thinking about the theme that's in play. What's the current theme that is playing out right now? That current theme right now is profit taking on long positions. Okay. That's all that should be on your mind right now. Well, because the data is pretty clear. Okay. The data is very clear. All right. We're not tracking commercials like all the textbooks tell you to, because if you're tracking commercials, you'd be looking at this column and you'd be like, oh, the commercials are adding to their shorts. All right. No, they're not adding to shorts. Forget about commercials. Non-commercials, they just maxed out on longs. Shorts have been added throughout gold since early March. Okay. Since early March. Now, let me ask you, how would you have done if you followed commercials and you've been short since early March? How would you have done all this time adding to a short position? Short, 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 short. Would you be in profit or would you be losing money right now? Right? Clearly, you'd be losing money. So you don't want to be following commercials. Non-commercials have been adding to their longs. So would you have made money adding to longs if you were just copying the non-commercials all throughout here? The answer is yes. Okay. So now they are taking profits on those long positions up here. They added it down here. They're exiting up here. So that is the current theme. It's going to take a while for them to offload positions. So this is not something that's going to happen. That's going to take place in 1 week or 2 weeks. All right. So as price comes down, we're going to likely see a reaction off that trend line. Let's wait. Let's not get crazy. Let's not start buying, because when we're looking at price action, we're looking to see what's really taking place. The data supports profit taking and a move to the downside. And right now, any type of bounce off that trend line is not going to likely be sustained. We're going to see a continued move to the downside. We're going to hit an area of buying that was previously tested several times in the past. So the odds, I'm not saying this is exactly what's going to happen, but I'm telling you the odds. The odds are, if the trend line breaks, price comes to demand. If price comes to demand, this demand zone breaks and price continues lower. These are the odds, okay? Now, can something completely different come in and change? Sure. What would have to happen is we'd have to look at the CFTC data, and we'd have to see new numbers coming in where the banks are now, out of nowhere, aggressively buying, okay? Aggressively buying, even though they've reached near max size. Is there still room for them to add to their longs? Sure. I mean, they could, okay? If we look at positions, 349, maximum size is 408. They could still push to 360, 380, 390, 400. They could still do that, okay? So in that case, how do we know if they're buying or not? Well, we look at the supply and demand that's coming into the markets. And right now on the daily chart, which is a shorter time frame, which dictates shorter time frame momentum, we can see an ascending structure has been broken. So momentum to the upside, low odds. Buying right now to support momentum to the upside, very low odds. Why? There's no demand here. What do we see? The only thing we see right now is that we have supply here. Supply is being formed, okay? So momentum is shifting to the downside. Once this ascending structure breaks, then we're going to have momentum starting to head downwards. Once this demand breaks, then if we get a descending structure, momentum will be a lot stronger to the downside, okay? So these are the key things that we're going to be watching. Like I said, the data is supporting that we're likely going to see a drop, but they could come in with significant buying. That's why we'll be looking at the supply and demand imbalances on the charts and determine what is likely going to take place just by examining what the banks are actually doing with their positions on the charts, okay? So that is gold. We've got a drop in silver because basically what gold does, silver does. So we're not very surprised by that. And again, we're seeing supply zones being created. and we're seeing demand areas being removed, okay? So now is not a time for short-term momentum to the upside. Now is not a time to be looking for short-term momentum to the upside, okay? Let's wait until this sell-off takes place in gold. Once price retraces, they've offloaded their long positions, then we'll be watching for evidence to suggest that they're going to come back into the market and buy. When we see that evidence to suggest that the buying is starting to come in, then we'll look for that on silver, and we'll look for new areas of demand to come into the market, and then we'll plan our trades and plan our long trades based off of that, okay? But right now, looking at the daily chart, it's signaling downside. Let's take a quick look here at what retail are at. Retail with respect to silver looks like they are nothing great. They're about 59% long, okay, and 41% short. So it looks like they're likely adding to long positions as price is dropping, which is exactly what they should not be doing, but that's what it looks like they're doing, okay? So as price is declining, they are adding to their long positions. So next week, we'll likely see this number grow even larger. Longs probably go into the 60s and maybe even into the 70s, okay? Once they get super aggressive with longs, we'll likely see a push to the upside. But depending on the conditions and where price is at that moment, it may be just a rally up to shorter term supply areas before they continue price to the downside. Okay. Last one I'll look at is the euro. And so we got that drop in price on the euro that we were talking about. And where did it drop to? Well, it dropped to a demand area. Okay. This is demand zone on the daily time frame. What are retail traders up to right now? Well, it's about 60% short right now. So you remember they were super aggressive with their shorts not too long ago. Like incredibly aggressive. And I said, there's no way that retail traders can sustain this. So what's likely going to happen is they're going to have to bail on those positions and start entering into longs. And so they sure did bail on those positions because that's what's been able to facilitate this move to the downside, is them bailing on those positions. So now this move to the downside is them bailing on those positions. So now they're at 60% short. It looks like they're still in the process of offloading those positions, okay? But what's dictating price right now is this area of demand on the smaller time frame. That is what's causing this short-term bump to the upside, okay? But let's look at the weekly chart. Weekly chart has been a very big mess for quite some time. You see the clouds that I've drawn over price action. The darker the green, the more aggressive institutional long positions are. The more darker the red, the more aggressive institutional short positions are. If it's a lighter color, that means they're reduced their positions to a significant sum, and they're either accumulating or in the process of offloading a significant position. As you can see right now, lately, I don't have any clouds circled around price action, which means there hasn't been anything aggressive. We could quickly look at their positions, okay, for the euro. And so maximum size on long is 266,000. We're at 179,000. So we've been seeing numbers drop from there. This past week, they went up a bit. But shorts, they've been reducing from 175 down to 155. If we look at the coloration of the cells here, they're blue. They're neutral. Positions are neutral with the banks right now. Okay. Big institutions are neutral with the euro. So it's very difficult to tell what's going to happen over a longer period of time, because as you can see, price has been ranging and not been doing much. Okay. So it'll be very difficult to tell, but we're going to keep our eyes tracked on the charts. We're going to be looking at the data that comes in and see when there's evidence to support something more aggressive, when there's price action that's showing us a certain direction is going to come into play. then we'll be paying more attention and having a clearer insight as to what is likely going to take place. But right now, retail traders, they're not doing much. They just offloaded a big position that they got wrong. They shorted when price was rallying up. And the banks are neutral. So I'm not going to trade this when the banks are neutral, okay? There's a lot more things to trade right now. We're in a bunch of stocks in our portfolio that are doing very well. And things are setting up. So many things are setting up. There's nice retracements happening in the stock market right now, which we talked about earlier this week. So we'll keep our eyes on things and keep you posted with what we see, okay? So that's it for the public version of this. I'm going to continue filming for another 10 minutes or so and go a little bit deeper into the markets for members only. If you want access to that video, this extended edition, go to our Twitter page and like the post that I made about this session, and I'll choose somebody later today to win this extended video analysis. All right, thanks. That's it for me. You take care, and I'll start recording for members right now.